Good morning, class 11th. Welcome to accountancy period. As you know, the chapter financial statement is in progress, and in my previous videos I told you about how to prepare trading account, how to calculate cost of goods sold. Today we are discussing the second income statement, that is known as profit and loss account for the year. While preparing trading account, we shows direct expenses, and here we will be showing indirect expenses. Indirect expenses. Direct expenses are the expenses which are related with purchase and production, whereas indirect expenses are related with either sales or office or our others day-to-day expenditure, or mean to say those expenses which are not to be shown into trading account. All those other expenses will be shown in profit and loss account. Like we have office and administrative expenses. In office we have so much clerical staff where accounting work is done. Then salary and wages, office rent, audit fees. Audit fees means when a CA come to our business to check our accounts. किसी भी बिजनेस के अकाउंट्स को सीए के द्वारा चेक किया जाता है, तो वो सीए उस अकाउंट को चेक करने की फीस लेता है, इज नोन एज ऑडिट फीस. प्रिंटिंग एंड स्टेशनरी, यू नो वेरी वेल, फोटोकॉपी एक्सपेंसेस, पेन, पेंसिल, इरेजर, रबर, नोटबुक एक्सेट्रा. पोस्टेज एंड टेलीग्राम, expenses related to post office or courier charges. Insurance, maybe fire insurance premium, property insurance. Office lighting, if the word factory light come, it will be going into trading account, but either it is office light or only lighting, then office expenses and general expenses. Then we have selling and distribution expenses. Expenses related to sale of goods or distribution of goods to the customer. Bad debts, carries outward, carries inward is direct expense. It is related with the trading account. If it is outward, it will be related to sale. If you only find the word only carries or freight, then it will be considered a direct expense. But if you find the word outward, whether it is freight outward or carries outward, it is indirect expense. Commission given on sale. Brokerage, also a kind of commission, or in Hindi it is known as dalali. Advertisement expenditure. Export duty, when we sell goods abroad. Packing charges, delivery charges. These are some of the selling and distribution expenses. And some other expenses are like depreciation, repair, interest on loan, bank charges, donation, charity, conveyance allowances. So all these expenses are known as indirect expenditure. These expenditure have nothing to do with purchase or production. That's why all expenses will be transferred over here. It is up to you whether you are dividing these heading, or directly you can write to salary and wages, to audit fees, to bad debts, to carries outward, etc. I think you understood. And this is our income side. In income side, first item will be coming gross profit. The gross profit which we get from trading account. Trading account को बनाने से जो profit मिलता है, that is known as gross profit. Then other income, by interest received, by commission received, by rent received, by discount received, by bad debt recovered, by dividend received, profit on sale of fixed assets. These are some of the examples of income, right? Now, if this account profit and loss, its credit is more, so difference will be on debit side, and that difference will be to net profit. इस डिफरेंस को हम क्या नाम देते हैं? नेट प्रॉफिट का नाम देते हैं. The profit which we get from trading account, that profit is known as gross profit. I told earlier also why we call that profit gross profit, because from that profit we have not deducted all the expenditure. But this profit is known as net profit. Why it is so? Because we have deducted here all kind of expenses and we have added all kind of income. If its debit side is more, credit is less, then difference will be net loss. The difference will be net loss. So easy it is. Just 3 or 4 sum it will take to you to set up the things in mind where the item will go in trading account and where the item will go in profit and loss account. It is very easy to differentiate. Like if I say audit fees, so audit fees has nothing to do with purchase or production. Postage and telegram has nothing to do with purchase and production. Carries outward, commission, advertisement, they have nothing to do with production or purchase. It is very easy to differentiate. Let us do one sum now. Page number in my book it is 21.6 and we are doing illustration number 11. We are doing illustration number 11. Prepare profit and loss account for the year ended on 31st March 2019. This is particular amount, debit side and credit side. Here the item are given. First item is given gross profit. So where we are going to write gross profit? Credit side. By gross profit 10,52,500 rupees. Then we have given trade expenses. Trade expenses 10,000. So two trade expense. I told earlier also, by the word trade do not get confused if trade expenses will come into trading account. Trade expense means other expenses which are related with business. Then we have carries on sale. So two carries on sale. The amount is given of rupees 50,000. Carries on sale. Then we have given office salary. Two office salary 79,000. Then we have given postage. Two postage 3,000 rupees. Then we have given office rent. Two office rent. Then we have given two legal charges. All these are indirect expenses. 37,500 and 2,000 rupees. Show all the expenses. Then we have given audit fees. We will be showing debit side. Then two donation, two audit fees, two donation items to be shown in the debit side because all are indirect expenditure. 5,500 donation. Then we have given sundry expense. What is the meaning of sundry expense here? There are various small expenses which cannot be shown by a separate heading. So we have collected together sundry expenses. Then we have given selling expense. So two selling expense 26,000 rupees. Now discount allowed. Again it is our indirect expense. Discount allowed. Debit side. Then we have lighting. Two lighting. Then we have given commission received, written very clearly, received. So it is our income. That's why it will be shown into credit side by commission received. The amount is 4,200. 4,200. Then we have given bad debts. So we will be writing on debit side, two bad debts. Then discount, it is written credit. Credit means received income by discount, credit side. Right? Then we have given interest on loan, expenses, debit side. Stable expense, again debit side. Then we have given export duty, debit side. Then we have given miscellaneous income. So we will be showing the income into credit, miscellaneous income. Then we have given unproductive expense. Here only. Productive expense, trading account. Productive means related to production. Unproductive, which are not related with production. Then we give traveling expense debit side. Now make the total of credit side, bring the total this side, make the total of debit side over here, deduct this amount from this. The difference will be known as to net profit. This is the way how to prepare profit and loss account. Let us do one more sum just by reading only. Illustration number 12. Calculate net profit. Page number next 21.17. Some is asking calculate gross profit also. It means we have to prepare both accounts. We have to prepare trading account and profit and loss. So let us, it will be easy for us to differentiate. Opening stock, debit side of trading account, to opening stock. Purchase, debit side of trading account, to purchase. Then we have given sales, buy sales, credit side. Then we have given sales return, deduct from sales. Then we have given purchase return, deduct from purchase from trading account. Then we have given wages, trading account, debit side. Then we have given advertisement, advertisement expenses belong to profit and loss. Then we have given rent and tax, profit and loss. Lighting, profit and loss. Commission paid, profit and loss. Then we have given commission received, it is our income. Then we have given traveling expense, debit side of profit and loss. Then we have given interest on long-term loan, debit side of profit and loss. Dividend or investment. What is the meaning of investment? Investment means the money which is invested outside the business. हमने अपने business से बाहर कहीं पैसा invest कर रखा है. And when we invest money outside the business, we get either interest on that or dividend. It is our income. That's why dividend received will come here. Dividend on investment. Then we have been printing and stationery, debit side. Loss on sale of machine, profit and loss, debit side. Then we have given carriage outward. Listen carefully, outward. If it is carriage inward, trading account. But here it is given carriage outward. That's why debit side of profit and loss. Loss by theft, debit side of profit and loss. Then gain on sale of building, credit side. And after this table we have given closing stock outside. Where the closing stock will come? Trading account, credit side. So first close the trading account, find the gross profit. This gross profit will be written on the credit side of profit and loss, and then find net profit. So this is how to calculate gross profit as well as net profit by preparing both ledger together. Right. Now the last part of our financial statement is we are preparing balance sheet now. Balance sheet. Now how to prepare balance sheet? Let us see, sir. Balance sheet. Balance sheet. Balance sheet as on whatever date is given, sir. Now this is the balance sheet. This is liability side. This is liability side. This is asset side. Here is amount and here also amount. Now remember, first of all, I am writing over here balance sheet as on. In profit and loss account, I wrote over here profit and loss for the year. So what is the difference between for the year and as on? For the year means we are showing here item of entire year, right from 1st April to 31st March for the year. But as on means, suppose I am writing here as on 31st March. So it means I will be writing here which are on 31st March only, not on 30th March, not on 1st April. 31 मार्च को जो मेरे पास बैलेंस होंगे वो all balance I am going to show over here. So this is the difference between as on and for the year. Number one difference. Number two, this is not an account. This is a statement, balance sheet. It is a sheet. It is a statement. So here this is not an account. That's why we are not going to use the word to or by. हम यहाँ पर to और by word को use नहीं करेंगे. Because it is not an account, it is a statement. And here this side is liability side, don't say it is debit. And this side is asset side, don't say it is credit. Just for your name's sake, you can say that as we know our liabilities always come on credit side, so liability. But here in this balance sheet the sides are opposite. यहाँ side opposite दी गई है, right? Here liability side you can say credit, but it is not credit side, it is liability side. Assets always have debit. We are showing on right hand side. You can say it is debit, but it is not actually debit, it is assets. So I think you understood. Trading account and profit and loss account both are account, they are nominal account. Debit and credit to and by. But balance sheet is not an account, it is a statement which shows the balance of assets and liabilities on a particular day, that is 31st March 2000, whatever year is given. Now this is assets. So first we will write all current assets. Current assets, cash balance, bank balance, sundry debtors, then BR, bill receivable, accrued income, prepaid expenses, prepaid expenses, closing inventory, closing inventory. All these are our current assets. Then we will show non-current assets, non-current assets, which are also known as fixed assets. These are land and building, land and building, plant and machine, plant and machine, goodwill, goodwill, patents, patents, furniture, furniture, motor vehicle, motor vehicle. Then you can say trademark, trademark, investment, which the money which is invested outside the business. All these are our assets, current assets and non-current assets. If you see carefully, here we are not showing a single item which is related with expense or income. इसमें से एक भी आइटम आपको ऐसी नहीं मिलेगी जो किससे रिलेट करती हो एक्सपेंस या इनकम से. Neither of trading account, not of profit and loss account item will come over here. Right? Now this side current liabilities. Current liabilities. Current liabilities are creditors, bills payable, outstanding expenses, bills payable, outstanding expenses, unaccrued income, unaccrued income or unearned income. Right? Then we have bank overdraft, bank overdraft. These are our all current liabilities, the liabilities which are to be paid within 1 year. Then here long-term liabilities or borrowings, long-term liabilities or borrowing like bank loan, etc. Then we are going to show over here capital. Write the capital into inner column. Add net profit, the net profit which we get from profit and loss account, and at last we are going to deduct less drawing. In capital, add net profit, deduct drawing, the balancing figure will come over here. Now write all current liabilities, long-term liabilities, capital in the same way, current assets, then fixed assets. Now make the total of both sides. Total of both sides should be equal. If total of both sides is equal, it means our sum is right. हमारा sum पूरी तरह से ठीक है. So this is known as balance sheet, which is prepared the third account or statement in financial statement or final accounts. So there are three account or statement we told you. Number 1 trading account, number 2 profit and loss account, and number 3 balance sheet. Now from next video we will start a numerical in which we will be preparing all these three statement or account together. And for today, thank you very much.